Houston.
Okay.
I grew up in Illinois. It's kind of like Indiana.
All right. So YouTube is not receiving enough video to maintain smooth stream. Okay. All right. So we are starting.
I see it now.
Let's see here. I'm going to mute myself.
Houston. I grew up in Illinois.
Oh yeah, you're gonna need to turn off the.
You guys need to turn off the YouTube stream.
Yeah.
We are starting. Yeah, mute the YouTube video. You didn't already.
All right, welcome to our first Koje YouTube roundtable discussion. My name is Dieter, and I am here the marketing lead for Koje, which means I am completely non-technical, and for the most part, I'm going to ask all the new questions to you guys. I'm right here in beautiful Germany, and with us we have Rand from Orbs.
Hello.
We have Tyler from QuickSwap.
Hey.
And Tyler from QiDAO. And somebody still has the YouTube stream going in the background.
Yeah, I think that's me. But hi, yes, I am Kilo from the QiDAO team. Yeah, it might be Tyler.
There you go. All right. What a train wreck. It's the first one of the YouTube roundtable discussion, so we're gonna get the tech all straightened out here soon. So Tyler, let's start up with you. Where you based? Tell me a little bit about yourself, and how did you get into the DGen game? How did you get into yield farming and the whole crypto world?
Yeah, so I really started about, I think it was 2017. Bitcoin was like $1,000. ETH was $15, and I bought some because I heard about it on the internet. And then a couple weeks later, it was $45 Ethereum. So I sold it because I was like, oh, triple my money. And then, I mean, I don't know, it was like 8 months later, that's when I hit the 1,500. But throughout the way, I really got into like all the different aspects of it, like Compound and Aave. And even there was slight gaming back then. The gas fees were always 1 GUI, so that was nice. You really wanted your transaction to go through, you'd do 1.01 or 1.1 GUI. So that was fun. And then gas fees got crazy. Binance Smart Chain came out. Then I was on Cake day one. Actually, it's Cake's birthday. I got the pancake swap shirt on.
Nice.
Yes, happy birthday, Pancake. Shout out. And then Polygon came out. Saw QuickSwap, using QuickSwap a lot. Kind of saw it looked like they needed help, so I reached out to them. And then Rock offered me to start working there about 5-6 months ago. So yeah, I did the business development side. I started like the syrup pools. I do like the rewards and the white listings. So a little about me.
Cool. Ran, how about you?
Yeah, I start quite early in our space. I've been around, I guess, since 2015. I'm actually a lawyer by trade. I don't tell that to anyone anymore, but that's what I went to school. So I was actually a high-tech M&A lawyer working for one of the bigger law firms here in Tel Aviv. That's where I'm based. And we had one client come up one day saying, hey, listen, I did this crowdfunding thing and I raised $100,000 via this crowdfunding platform, and I got some Bitcoin, and I'm not sure what I'm supposed to do with it. And I was like, okay, what's Bitcoin? And that was, I think, one of the world's first ICOs. There was something called Get Gems a while ago. We had to figure out how to convert because there was like no OTC or working exchanges. We did like, an agreement on paper with who are now Circle. Back then, I think, BTC price was $300 back then. So yeah, really got some clients from this space. There was a lot of early success. A lot of people here in Tel Aviv was like very early investors in Ethereum. So all of them got pretty rich very quick, started their own ventures. So I got to be involved with quite a few of those, as a lawyer. And then, kind of early, 2017 was like the point where I said, I can't be on the sidelines anymore. That's it. I can't continue my, day job at a corporate law firm. It doesn't work. So I basically jumped ship, went, to work for Orbs when we started. That was mid 2017. And yeah, now, actually, long story. I'll try to keep it quick. But we started as a blockchain infrastructure for enterprise because we really thought that that's where we're going to see a lot of the engagement. And I think fast forward 4 years, there's no engagement for enterprise in the blockchain space really, just because blockchain is about giving up control, and that's not what we see big enterprises looking to do. But yeah, we've come to see the DeFi as a place to be. That's where engagement is. That's where users are. That's where the really big tech innovation is happening. So we did kind of a pivot away from blockchain infrastructure for into the DeFi space, and we've been very active in the space for the last year and a half probably.
That's awesome. So is it Kila?
Kila officially, but yes, people do call me Kila. My degen story, it's a long degen story, and I'm one of those type of people that I don't know if you like kind of just machine gun and try everything out. I don't like focusing on anything. I try everything. I'll throw my money everywhere, which is sometimes great, sometimes not so good. I've been burned quite a few times. But I guess my crypto beginnings started when I was in university. I would go to a bunch of different hackathons, and then I went to this one hackathon, Money 2020. It's a big conference in Vegas about the future of money. There was a sponsor of the hackathon, had a challenge, had a prize there, and it was blockchain.com. They were talking about Bitcoin, all that kind of good stuff. Really piqued my interest because the university I went to, it's the same university that the founder of Silk Road went to. And so 1 year prior, he had gotten busted. And so there was a lot of talk on campus about Silk Road, BTC. And so, yeah, when I saw BTC and all the people at the booth were talking about BTC, it really kind of sparked my interest. And so I did a project there, and then, went home, continued to go to hackathons. And then it was really the next year when I went to Money 2020 when everything kind of changed in my mind. All the booths that I went to, they were talking about blockchain, how blockchain is going to change the world. It's the craziest thing. It's amazing, this and that. And it kind of sounded scammy to me, but I was like, there's a lot of smart people here. There's, it's got to have some kind of, value to it. So I started doing more research into it, throwing more money into it. Again, college student at the time, not a lot of money, but it was a lot for me. And then, I just continued to do hackathons, put on a lot of blockchain hackathons, dive deeper and deeper into the space. Through my hackathon journey, I actually met a ton of brilliant people, which is one of the reasons why I love hackathons, because I get to meet people that are way smarter than myself. And that's kind of how I got introduced to, QiDAO, and kind of got into, the QiDAO team. And ever since then, just continued to degen. I throw money at different farms, different NFTs. It's not wise what I do. I would not recommend anyone do what I do, but for me, it's like a YOLO. Just YOLO live once.
So, what strategies do you have that you keep yourself from throwing good money off the bat? How do you evaluate projects?
Yeah, that's been a journey. So at the beginning, it was really just kind of shotgun, throw money in. I think as you've been burnt a couple times, also as you've built projects yourself, you get to identify, you know, solid projects, solid teams from non-solid projects and solid teams. And so yeah, I mean, different things. Roadmaps are always good. Longevity, seeing if they actually have doxed themselves, if there's people within the team that you can see their face, you can see their Twitter, you can see their LinkedIn or something along those lines. That's always a positive sign, because if things go south, there's at least somebody to point the blame to. Yeah, and then also, I mean, it's really, does the project have legs? Is it just something that was spun up overnight? No thought into it, no deep partnerships or anything along those lines. Is the team trying to create partnerships with other projects? Those are the type of things I look at now. So, yeah.
Ran, how about you?
Yes, I think the main thing that I do is not make my own decisions when it comes to deciding what to buy, where to farm. No, I'm just kidding. But basically, we're a team here. One thing that we're trying to do, when managing our treasury and trying to figure out which projects we want to be involved in, which projects we want to be invested in, is basically, first we're trying to look at the team, trying to see who are the people involved, what their reputation are. Now a lot of the times projects are completely anonymous, so that's more difficult to do. But then again, sometimes even in the anonymous space, you see, teams with proven track record, and see people who you feel better trusting in terms of going into the project. That's two. And again, that's not available for anyone, but we personally do look at the smart contracts before we put in money into anything. I mean, we have a dedicated team, review the smart contracts, want to see, how it works, time locks and backdoors, etc. And we make sure that, we're safe from that perspective. And this is basically, I mean, the big innovation of DeFi, right? Because having a trusted counterparty that's been there, forever. Some people trust their bank, some people don't trust their bank, but basically you have to make a judgment, right? Here you have that technology to actually digitally prove, you can create digital trust, right? You can read the code, you can understand what it does, and you can see whether or not it's safe. And yeah, sometimes you have to YOLO into stuff. Sometimes you see those opportunities that, you feel are good. You don't have the time to do the due diligence, you don't have the capabilities to do the due diligence, and you YOLO into them. But then you need to make sure that, you're willing to lose that money, right? You put enough, right? You put just enough so you can enjoy the upside, but you always have to be prepared to, take the downside if it happens.
So I have a follow-up to that, though. That goes along with, yes, everything is public and it's all in the code, right? We all just can look at the code and know if it's a rug or not. But in the end, a lot of us don't know how to read Solidity or whatever code is on the blockchain. So I hear the term do your own research, but if you don't know how to program, how do you go about that?
So it's a very good question, and obviously, a lot of times you can't. But I think at least for the bigger, more established projects, especially in yield farming, where it doesn't really have to. Back in the ICO days, you had to buy something very cheap. You had to hold on to it. Sometimes you could miss the trades pretty early if you didn't YOLO in. A lot of times when farming, you have the return. You know what it is. You can see the APYs, and you can take the time to make the decision. And I think at least for the bigger projects, so you can wait to get to the bigger projects. You don't have to YOLO into the smaller ones at the moment they come out. But also I think the projects have audits. You can look at them. You can Google who's a credible auditor, right? You can look at public audits, and you can decide whether or not you wanna participate based on that. You don't have to do your own research. It doesn't always mean read the code. You just look at credible audits as well.
Right. So yeah. I tend to look at Rug Doctor a lot, and like Coach, we got audited by Obelisk. Mm-hmm. And our users requested a second audit, so now we're doing the Paladin audit, and we're going to publish the results of that here fairly quickly. Keela, you were going to say something?
No, I would definitely say look for some reputable audits. However, one thing is just because it has an audit does not mean that it's not going to rug. A lot of times audits will look at the code, see if there's anything broken there, but they may not be thinking of actually they may not be thinking about the actual economic piece of it. Are there holes in the strategy that you've thought of? Another thing is, it's sad to see, but sometimes sometimes it's just bad actors. So you've got hacks that can screw you over. You can just have bad actors that will just generally rug you. So yeah, look at the audits, but an audit doesn't necessarily mean that it's all good to go. Seeing as, again, there's a lot of, you said, newbies here. Just want to make sure that they know that just because it's audited doesn't mean it's rug proof.
Right, and for the people that have been around for a while, I just mentioned the word Titan. So.
Oh man.
Yeah.
Tyler, how about you, man?
Yeah, I used to get into all the different, brand new yield farming and all the new projects, but now I just don't have the time. So I got most of my crypto in Bitcoin, ETH, QuickSwap, just some large cap ones, and then with the NFT game, I was actually looking at buying one of those mutant apes. You guys seen those? I was hoping the price would go down.
Oh man, I had the worst argument with my wife the other day. Actually, bought a pretty cheap NFT. Really, we're contributing to a cool project now. That what they do is it's called MyNFT.fyi. You can check it out. But basically, what this does is basically make sure that lets you verify that profile pic NFT that you're running on Twitter, that you actually own it on OpenSea. Basically, you sign in with your Twitter account, you sign in with your wallet, and make sure that you actually own the asset. And you can just download the picture and put it on your Twitter account. Anyways, I was trying it out the other day, and then I bought something. I bought non-fungible heroes. It's pretty cheap, full prices. It's 0.1 ETH or something. It's not very expensive. I was showing to my wife the product. Look, here what it does. I bought this one. Oh, you bought that picture? I was like, yeah. For how much? It's 0.12. It's 500. She's like, what did you do? I said, no, it's cool. It's a non-fungible token. She's like, what? It was a big argument. Next time I should really tell her, I guess.
No, she wants you to buy a better one. You gotta buy one of the Bored Ape Yacht Club.
Yeah, it's hard to, even if you're willing to pay, it's hard to get those now. People don't sell.
Yeah, a lot of them are. It's like the CryptoPunks. There's not even any for sale. You have to bid,
right,
and then have someone accept it. That's why the mutant apes, I think they look cool. They're also, I think it's 4 ETH, which if you buy that, it's what, 12 grand now.
Yeah, exactly.
I'll tell you something about. Yeah, I'm sorry. There's something about NFT specifically. There's a yield farming. I'm just saying, I think the engagement with NFT is just crazy. There's so many people I see. All the guys here. Everybody's into crypto for a while. Everybody had their Bitcoin and Ether and whatever. But I didn't see something that has such a great conversion rate. It's like NFTs. You go, you talk to people about NFTs. Then you meet the week after and say, I went into OpenSea. I bought a few of those. They're pretty nice. So I think the engagement that NFT creates is crazy. Really. This is the way I see it's the next step into the metaverse, right? It's crazy.
Think about Gary Vaynerchuk, right? With his VFriends project, how many people has he brought into the NFT space with VFriends, and how many people are coming into crypto for the first time in their lives just because they're following him.
Yeah. It's similar for a lot of different celebrities and big popular people is they're getting into the NFT game, which definitely is great to see because it's introducing more and more people into the blockchain space. I think one thing is there's been this really great craze, and for me, I much rather have spend money on an NFT than maybe a Louis Vuitton belt or something like that nobody can see. At least with my NFT, I can trout it online. But for me, I do see the NFT space as something that's going to be really large, and I love the fact that people are actually understanding, and that like celebrities are really bringing in new audiences to the blockchain space.
And doesn't it make us all feel better about buying NFTs when we're just talking about, oh, I'm just spending 1 or 2 ETH on an NFT. So even the new iPhone 13 is now looking cheap at 0.4 ETH, right?
Yeah,
it's not real money.
Yeah,
And then you can rock the NFT as the wallpaper if you want to. That's,
there you go.
Tyler,
Like,
Tyler, no, go ahead.
No, I was just saying, I wish that there was more like big popular NFTs on Polygon. That way you don't have to spend all the big gas fees. But yeah, go ahead, Tyler. I think they're just gonna ask.
Tyler, talk to me a little bit about QuickSwap. What does QuickSwap do for a node? And then what have you guys been up to?
Yeah, so it's really quick. QuickSwap is a automated market maker, which is basically we're Uniswap. So hopefully you guys know what Uniswap is, but it just allows users to trade assets, and then you can also make there's like profit sharing if you provide LP, because every time someone swaps, there's a fee, and most of that fee goes to the people that provide liquidity, and then we have a small fee for our single staking quick called the Dragon's Lair, and then we have a 0.01% fee that goes to development. So the latest thing I've been up to actually is we launched something called Dragon Syrup, which I mentioned the Dragon's Lair. That's single stake quick, where it's fee sharing from transaction fees. And when you stake there, you get a receipt token called DQuick. And now what we allow users to do is stake that DQuick in one of, I think, 31 pools now. And you can earn, it's like a bonus token, I guess. It's basically projects provide tokens in order to have liquidity mining on our exchange. I guess another part of QuickSwap is we have the Quick token, which to incentivize people to provide the LP, some pairs you can stake and actually earn Quick token. I guess it's kind of complex. It's hard to explain to like really new people because there's so many moving parts of QuickSwap, so many different places to stake. It's just one site, and you're like knowing what coins to stake where, and what coins to provide LP with. But anyway, yeah. So currently we have about 40% APR on our fee sharing on DQuick, and then an additional. I'm looking now, it's like 55% on the bonus token. So it's like, I mean, APR is like 90, 100%, just for a single staking quick, which is kind of crazy because typically those yields are, more for liquidity, or when you pair LP, of course, because that pairing LP has more risk, because if one asset changes a lot of price, I guess you lose a lot more money than if you just held both of them separately. So, more risk, more reward. But with single stake quaking, or single quick staking, you don't have the impermanent loss risk. So, so we're really happy about that. Of course, the high APY comes with the cost of the low quick price. So it's like double-edged sword, but.
So how do you guys evaluate how to whitelist projects like on Polygon? So when I go into QuickSwap and I go to trade, we all are familiar with having to put on contract addresses for some of the new farms, etc. How do you evaluate which projects are quote unquote worthy to be listed?
Yeah, so now what we look at a couple things. The main thing would be TVL and volume, so total value locked and volume. So just seeing how many users are trading that pool and like how much money are in those pairs, because typically the pairs with more money will have more users. So the more users, the better user experience we want. So we'll add those to the whitelist. So we have metrics where we can see the top traded pairs, top TVL. So we look at that and see if there's some that aren't whitelisted. Another thing with our Dragon Syrup, which is the single staking quick. Any project that joins that, since they're giving a lot of their project tokens, we whitelist them. I guess that's really the two ways in order to be whitelisted. Hopefully you have, either like strong community, strong TVL, strong volume, or some coins, for example, Mask. They're a ERC20 token, like they live on Ethereum, but they gave us a lot of money for the SERP program in exchange for liquidity mining rewards. So it's like we whitelisted them because it appears they want to move to Polygon. So yeah.
How do
we had a good experience with that, right, Tyler? I mean, Orbs is also a native, just because we've been around quite some time. So we are an ERC20 token. We migrated into Polygon, in order to expand our ecosystem. And we partnered with a couple of we partnered with DinoSwap. We were there. We have a farm on KogeFarm. And only after that, when we had like I think a couple $1 million of TVL, then we reached out to you guys, and you guys listed us.
Yeah.
So.
Yes. That's one example of. Yeah, that's funny too, because the same day I saw your token, because DinoSwap, typically when projects list there, they like explode in TVL. So I think you were like our 8th or something by volume or TVL. I was like, why are these guys not whitelisted? So I looked into it more and I was like, oh, they just launched on DinoSwap. And then it's funny because right after someone reached out, it's like, can we get whitelisted? I was like, yeah, I was actually about to.
We got somebody random just popped up on not randomly, somebody in our community on our Telegram say, hey, talk to Tyler guy from QuickSwap. So somebody share your handle to the entire world and told us to DM you, so we did.
Yeah. So that's really one way. I mean, there's not a science behind it. It's kind of just like, and of course, before we list anything, we'll make sure there's like audits and things like that. So we try to be as safe as possible. Right. But of course, nothing's 100% safe.
Isn't it interesting that as much as this community is now celebrating an anonymity, and in the end, it all comes back down to community, right? Tyler talked to Rand, I mean, everybody's just talking to each other and communicating with each other, and this is how all these awesome relationships come together. That's why we're all here on this call, right? Everybody networking and really trying to build a really cool community.
It's crazy stuff, we have doing business in our space, and we have relationships with people, right? Ongoing relationships for a while. I mean, we had a syrup pool with Pancake, you guys mentioned them, a few months ago, very active, talking to them all the time, and I'm talking to the guy, Chef something, right? Chef Fruit, Chef Hops, right? And I feel like we have, a relationship, right? I feel like I know the person I'm talking to, but I have no idea who he is. I have no idea where he's from. You always try to look at the times when people answer you to try to figure out where are they from the world, Sometimes people with good English, you can't really tell. Super weird, Again, I have wife stories, I'm talking to a few chefs one day, then the other day, I'm talking to a few alpacas today. That's a nice business together.
The DinoSwap guys were hilarious when I first met them. It was just a call, the Google Meet, and then all of a sudden, they all have different dinosaur emojis. All these dinosaurs just started popping up. I was like, what the heck?
Right. It's like, honey, who are you texting with? I'm texting with this T-Rex guy. He's a nice guy. Doing some business.
That's awesome.
So last question for Tyler. How do you stay ahead of so many of the other DEXs that are out there, right? How do you guys innovate in this ever-changing world?
Yeah, so recently it's been, I'll say, more difficult because you have things like AVAX and Solana that have crazy amounts of money, hundreds of millions of dollars that they're giving to DEXs and other projects to come launch with them. And QuickSwap doesn't have that kind of money. We have money to give to projects to move over, but that's where we've been recently working with Polygon to kind of grow grow the whole ecosystem, the Polygon ecosystem, because right now it's kind of just like, I mean, I won't say we're watching what others do. Of course we do that, but we're thinking of what ways can we get ahead. So that's one thing with the syrup pools. Dinosaur kind of does the same thing. Is like for a small amount of money for these projects, like say $100,000, they can have millions in TVL. Whereas if they didn't do Dinosaur or syrup pools, they'd have to bring all that TVL themselves to incentivize users to trade, because otherwise there wouldn't be enough liquidity for people to trade. So it's really, I kind of think of it like exchange listing. It's like you can pay the money, but like we also give all the money back in the form of quick rewards for the LP mining. So it's even if the projects did a liquidity mining campaign themselves, they'd still get the same amount of money. But now you can have QuickSwap like sponsor the liquidity mining event. So we try to be innovative in that way. I think right now it's just a matter of education, which is something we're working on right now. So, and then of course we got a UI update coming. Website's a bit clunky for my liking, so.
Hey, just want to point out, Koje got the brand new 2.0 UI version that we rolled out this week.
Oh, really? I need to take it.
Yeah.
I need to look at it.
It's very nice. I checked it out today. Looks very good.
So yeah, we finally got off our old QuickSwap.
Yeah.
Anyway, so
I want to say something.
Go ahead.
Yeah. Sorry, Peter. So I want to say something about what Tyler said. That I completely agree with, and I think is amazing when it comes to all this like syrup type arrangements for yield farming, because again, those of us who have been enough time in the space, about exchanges. Right, you come up to exchanges, come up to you, come up to the exchange, say, hey, pay me tons of money, I'll list you, I'll get you to users, whatever. I think that's kind of over now. I mean, reputable exchanges won't ask for listing fees anymore. That's like a thing of the past, I think, at least. But that always sucks, because as a project, you raise money. What you want to do with the money, you want to develop a platform, you want to give back to your community. You don't want to waste it on centralized exchanges that takes your money, give you some ad space, and that's it. And I think what's really nice about these type of arrangements when you do farming is basically that you exchange, like let's say I partner with a project, right? I partner with QuickSwap. Basically what we do is we kind of like we cross incentivize our communities, right? I give a little bit of our token that gets to users of QuickSwap or whatever, whoever I'm partnering with, and then my users get a little bit of their tokens. So it's not like I'm paying and some centralized entity takes it. Basically, I'm paying somebody else's community a little bit just so they get to know me. They're paying my community a little bit. Everybody has higher APY. Everybody's happy, and basically that's all the money that's being spent goes back to the community, like respective communities. And that's why I think these type of arrangements are so much better now and are so much more fair as they used to be a couple of years ago. And I think a lot more of the benefit gets to the users now.
Right. Kila, talk to us about QiDAO, about your project.
Yeah. So QiDAO essentially is a way for people to use their assets, use that value of their assets without having to sell them. So if you've got BTC, ETH, if you've got Matic, whatever it may be, you can take that, throw it into a vault, and you can borrow stable coins against it. So if you have a feeling that BTC, ETH, or all of the collaterals that we have are going to go through the roof in value, you don't want to sell them, because if you sell them, you miss out on those potential gains. So for us, it's really essentially just being able to use your assets, use the value of your assets while still holding on to them, which is great for people who want to yield farm, people who want to pay their bills, people who want to lever up or diversify the portfolio. Just throw their tokens, throw their assets into a vault, borrow stable coins, and do whatever you really want with them. Essentially, like in a nutshell, that's really what QiDAO is. I mean, I can dive into like liquidity mining and all that kind of stuff, how we look at it. But
So basically, what I'm hearing is people can stake their ETH with you so that they can actually go purchase the Lambo and drive that Lambo before they're really super rich. Is that what I'm hearing?
well, yes, correct. You can throw your ETH into our vaults because I mean, most likely if you're holding on to ETH, you're gonna think it's going up even further. You really want that Lamborghini. You want to buy that Lamborghini, but you don't want to sell your ETH because there's that opportunity cost. I sell my ETH, buy that Lambo. If ETH triples in price, well, my Lambo's depreciated, and so it wasn't really a good investment. We give you the opportunity of throwing it in there, borrowing stablecoin, go buy your Lambo. You still hold on to your ETH. You do have debt, and so you'll have to pay back that debt at some point if you want to take out all of your ETH. But you can go and enjoy your Lamborghini. We do have 0% interest, so you can hold on to your loan for as long as the Lamborghini will run before you really have to pay it back. And yeah, we also just launched some Volt, our borrowing incentives. So if you borrow our stablecoin against collaterals, you will be getting incentives within a certain range. So that's been really exciting as well. Quick just got a Chainlink Oracle, which means that we're likely going to be adding dquick as collateral pretty soon. So that's really exciting for us as well as hopefully the QuickSwap community. But yeah.
Yeah, for sure. It's gonna be exciting because if it's stake dquick, then users that stake also earn they earn quick on top of the dquick. Well, dquick is always worth more and more quick. So basically, you could stake in QiDAO and earn interest on trading fees from QuickSwap, but then also borrow stablecoins against it.
Yeah, it's a pretty cool mechanism. So if you've got quick, go stake it. Now you can use that dquick, throw it into a vault, borrow stablecoin. You can trade it for whatever LP that you really wanted to do. Farm that, earn more quick, throw that quick, stake that. You continuously earn more quick as you're staking, and so it's a loop that can continue. Or you can do whatever else you want with that stablecoin. But we really essentially want to just give people the power of finances into their own hands, being able to use the assets value, while they're owning those assets. And another thing that we're looking at, kind of the next big thing, is using LPs as collateral. Because right now, if you have an LP, you just have to sit on it, right? You're earning interest, but that LP has some value. There's two assets in there that have value. We want to be able to allow people to take that LP, still be earning their yield on it, but then take that and borrow against that as well.
But how in the world would you deal with impermanent loss?
Yeah, that's one of those things that those are something that you really have to deal with if you're looking at farming in general.
All right, let's switch the conversation then slightly before we go to Rand and hear about Orbs. How do the pros mitigate impermanent loss?
Okay, yeah.
They calculate it. You calculate the impermanent loss to the best of your ability, and decide whether or not the strategy makes sense. That's what the pros do. It's not easy, not something I could do by myself, but that's what people do.
And
you gotta think, do the liquidity mining rewards, because typically the pairs with high impermanent loss, like for example, new farms with really high inflation, super high APR, typically those are higher risk for impermanent loss. So you kind of got to do the math. Am I going to make more money with the token rewards for staking the LP than I will lose with the permanent loss? And then, if the answer is yes, I will make more money with the liquidity mining rewards, then it makes sense to do it.
Yeah. your only other options really are really, you can farm stable pairs, which there you go, okay, cool. Or I mean, you find single staking pools like with Decoy, or even with Chi. We also have an option for people to stake their Chi and then earn rewards on top of that. But yes, with impermanent loss, it's very, very difficult to kind of calculate and then just avoid it altogether.
Another thing people do, for example, we have a Bitcoin ETH pair. So if someone thinks Bitcoin and ETH move together, with a tight percentage, there's less impermanent loss there. So like a Bitcoin ETH LP might be better than say Bitcoin stable pair. So yeah.
Gotcha. Ren, talk to me about Orbs, man, because I'm really trying to wrap my head around some of your white papers and FAQs and everything, and yeah. So why don't you tell us what the Orbs project is all about?
Okay. So it's a few things, but I'll start one by one. So basically, Orbs is an infrastructure project, right? Again, when we launched 2017, it was all about who's going to be the next Ethereum, who's going to be better, who's going to be more scalable, who's going to be the fastest. Basically, what we try to do is we looked at how Ethereum and some of the other blockchains are working, and we said, okay, some of the stuff doesn't make sense. Like, if you're an actual developer looking to do something in mass scale, then, having your gas fees being with even like let's keep like the again, could be high, could be low, but just having it be like real-time bid variable is really weird for a developer. You want to know how much your infrastructure costs. Another thing that is weird in Ethereum, for example, is that the users are paying for their infrastructure, which doesn't happen. We're using Zoom now, we're not paying for the infrastructure, right? When using social networks, you don't pay for the infrastructure. So basically what we wanted to do is we wanted to build like a blockchain that, in terms of like the developer experience, works a little bit more like how, cloud services usually work, or how AWS work. I mean, the developer pays for the infrastructure using a subscription. The cost is fixed. You know how much infrastructure costs when you begin. You can write not just in Solidity or other languages. There's a bit difficult. You can write in Go, whatever, like regular, most common used programming languages. And we built a blockchain for that. Again, like our go-to-market was more enterprise to begin with, and now we have pivoted into more DeFi stuff. And another thing that we realized is you don't really have to work on like one chain. That's something I see the industry as a whole kind of understood at a point, right? It's not, oh, who's going to win? It's going to be Ethereum, it's going to be somebody else. That's not a thing anymore. It's more about like interconnectivity. So, the way our system is built now is really about like working in conjunction with Ethereum. Even our token is an ERC20 token, with BSC, with other EVM-based, Polygon, with other EVM-based blockchains. And basically, just, again, a product for developers, so it's less user-facing. In addition, we are building super cool stuff for the DeFi space. We have DeFi.org, that's our accelerator in collaboration with partnerships. So we have some projects that are coming out of there. Some of them are very, very nice, and we're building very cool tools. For example, I mentioned my NFT.FYI. That's a way to verify that you own the NFT you rock as a profile pic. We have real-time impermanent loss calculators that we use them internally, but we're gonna launch them publicly pretty soon. We have a very cool thing we're working on, still a bit stealth. I mean, not really stealth, but we're not talking about it too much right now yet, is a notification protocol. I mean, and that's something that's very, very relevant for users. One of the things that's crazy here is to keep track of your positions, right? We're talking about impermanent loss, also liquidations. We've talked about some systems that you do, leverage farming. You can get liquidators on those quite easily, and I think any of us who are exposed to this space know that you can get liquidated quite easily with price fluctuation. We're building a system that monitors smart contracts in real time and lets in your position's risk and give you like actual notifications on an app on your phone. This is something we're going to be rolling out with a couple of partners pretty soon. So we're more like on the B2B side. Everything's powered by our token, obviously, and we have a proof of stake system, but more on the B2B side, rolling out some tools for DeFi.
Okay, that's pretty awesome. We're running short of time. Do you guys have a couple more minutes?
Yeah.
You guys good?
I'm good.
Tyler?
Sure.
Yeah.
Okay. So I'm wondering what you guys' view is on the whole Polygon network as a whole. Polygon has just crossed 207,000 active users, the most active users ever. It had about 40% of the traffic that ETH does, but yet we all hear about Solana, FTM, AVAX, all of that, and all the new chains coming up. What do you guys think the future of Matic is in respect to yield farming and then in general? And what do you think of some of the other chains? Tyler, how about we'll start with you this time?
Yeah, I know. Polygon's working on some things. I'll say that. So in terms of like yield farming, I think one thing I really think is people will go where like the highest yield is. Like for example, if you have Aave on Polygon and you're getting 3% on your USDC, but Aave is also on AVAX and they're giving 10% on USDC. It's like if you're a user and you're looking to park your USDC somewhere, like why would you pick Polygon over AVAX? AVAX has double or triple the yield. So that's one thing I mentioned before is they have a lot of money to give to projects as like incentive to come over, and so does Polygon. But and Polygon has given some to like Sushi and Curve and Aave. That's why Aave has the dual farming with Matic. So right now it's a big hype cycle. I don't know if it's a bubble or what, but when projects grow this fast and they can say they have all this money, but once they start giving out the money, it's like people will probably sell it. That kind of happened with Polygon when they started giving out the money at 270, and Matic was 270. Now it's at $1. So it might happen to other chains. It's just a matter of trying to balance. Just like I guess balance the budget. It's just a big budget. And then the future of yield farming with Polygon being so cheap with the gas fees. I don't know why more people aren't yield farming on Polygon. Like I mentioned before, I think it's just a matter of lack of education, and that's the same issue QuickSwap has, because even some people that are big in the Polygon space, like they don't even know that QuickSwap has these new syrup pools. So like some people are staking their DQuick, but they didn't put the DQuick in the syrup pools. But it's essentially just free money, the people that already have DQuick. So I think it's lack of education, and also I talked to some people about NFTs, and they just assume it has to be on Ethereum because that's what everyone else is doing. So trying to promote Polygon as like an eco-friendly place to launch your NFTs, and users don't have to pay $100, $300 every time they trade by one of these NFTs. I think Polygon still has a bunch of room to grow. Yield farming still has a bunch of room to grow.
But does it come down to it's all about the community?
Yeah, community's a big thing too. We see a lot of people moving over from Binance Smart Chain. There's say earlier this year, you had like the big growth of Binance Smart Chain, and then you had all the rugs and all the scams, and that's obviously a bad look for the community. And every chain is going to have that. Every chain is going to have people trying to rug or scam and things like that. But it's just if there's a lot of big accounts, like big following, promoting all these projects, and some of them turn out to be scams, it's like, how much do you trust that person now if they promote something? So something us and Polygon are really going to try to do is like make sure these projects are safe before we start promoting them to try to get like a better community, to try to prevent that. Because I saw even just this morning, AVAX, I think it was one of their biggest lending and borrowing platforms. I think it got exploited. It wasn't like a rug, but I think it was 35 million someone took. So they're still trying to figure out what all happened and see if they can get it back. So it's
Which
yeah.
which project was that?
I'm not sure which project. I don't do anything on AVAX.
I got you.
Avalanche, but if you look it up, you'll find it. Just look up 35 million.
Oh, Jesus.
Yeah, I mean, farmers. If you're just a pure farmer, you're gonna go to the highest, like where you have the highest APY, which is, I mean, one reason why we have my being able to bridge over to like Avalanche and Phantom and then Solana is because we know that farmers are going to want to farm and chase those APYs. But I think the hardcore like DeFi people, they're going to want to be on chains that actually have different solid projects built on them. They're going to want to have things to do with their tokens or their money once they're on a platform. And I think Polygon is doing a really good job of creating that ecosystem and that a place for people to build. I know that they're kind of gearing up with the Polygon studios for NFTs and gaming and stuff along those lines, which will also give a lot of people a reason to be here on Polygon. Yeah, Dieter, you have something like that.
Yeah, I'm just wondering. I'm hugely bullish on Matic Polygon, but the one thing that I find disturbing is how quickly the network just seems to slow down when a lot of users are processing transactions. We keep on getting messages in our Telegram channel, hey, I can't take out my money out of this pool, out of that pool. And it's like, no, Polygon is slow right now, just give it a second. Hey, I can't trade Koje on QuickSwap right now. Why is that? We're like, network is slow right now, try a different RPC, whatever. But it feels like
our proof of stake is on Ethereum. You should see the hate messages we get for gas prices. Why should I pay $100 to just withdraw my token? Dude, that's Ethereum, that's not us.
Well, that's it. But so I'm just wondering what you guys think about some of these growing pains.
Yeah, so one thing I'll say is the network isn't slow. It's still processing the same amount of transactions. It's just if people use the recommended GUI, it will be slow because there's so many transactions. People are trying to happen at the same time. People bump up the GUI to like 1,000. Like they'll just type in 1,000 and do a bunch of transactions just so they know it's going to go through. Because if you do that, it will go through like within 3 blocks. So it's still like a 10-second thing. But if you're using one GUI still, like MetaMask recommends, because MetaMask can obviously predict future transactions, so they just predict what the gas prices are at now. But if there's all of a sudden a surge of all these transactions, and you get the lowest GUI, like you're gonna get pushed to the back, you have to wait for the network to come down in gas prices. So that's one thing. But if you've seen like Polygon Twitter, they've announced 2 different, I guess to call it like L2s, L2s of the L2, or I guess they probably want to be called scaling solutions. Those 2 scaling solutions that Polygon is working with. So, once those comes out, it'll be another 10x, 100x in transactions. So, yeah, I mean, right now, even with the super high gas prices like we saw yesterday with the market volatility, in Polygon, I think it might have been like 100 GUI if you want your transaction to go through within like a minute. It's still, depending on what you do, it's still like 10 cents per transaction fee, which, I mean, it's still way less than Binance Smart Chain and obviously way less than ETH, but once these scaling solutions come out, it might stay at, a penny transaction fee for these. And one thing I'll say too is, obviously people want low transaction fees, but if they're too low, like we saw before, that's when it's cheap for people to like spam attack the network. because back early in the ETH days, like 2017, you could spam attack the ETH network with like a bunch of false transactions, and pay, I think it was a few $1,000s at the time, to do that, to kind of like block the network. If you want to do that today, you'd have to spend like $10 million, and it's not like you'd get anything in return about that. It's like you'd spend $10 million just to make ETH look bad. It's like, it doesn't make sense. But on these chains, I mean, for Solana, for example, last week they had the spam attack. It shut down the whole blockchain for 18 hours. It's like, you can't have that happen. So
that was insane. That was just insane. And compared to AVAX, and I mean, we know a ton of money is moving over to AVAX, right? But what a transaction over there costs you $1.
does it?
Yeah, it's not as cheap as Polygon, not nearly as cheap as Polygon. So you have to be a little bit more careful about spending money on AVAX.
Interesting. Okay, yeah, I always thought that they were cheaper. I assume that's why people would rush over there. But
It's super fast. But Keela, go ahead.
Yeah, no. For Tyler, it's those APYs that people are running towards.
yeah, I know. I know they're one of the APYs. I see all the money that they got.
Right. Rand, you go ahead.
I have a bit of a different look at this. I think that now, I mean, looking at the future of DeFi, the question is who's going to be the participants. I think now it's tons of ETH whales, right? People with a lot of Ethereum, and a lot of like people who have been in the space for a while. And I think we've come to a place where it's basically unacceptable for you to just hold on to your, back in 2017, everybody was holding their Bitcoin, their Ether, and that was it. We're looking whether it go up and down. Nobody ever thought about getting interest on your, on your assets. And now I think it's negligent to not get some APY on your assets, right? You can go for something low risk, you can go for something high risk, but just holding on to your like ETH without doing anything with them is not something people can live with anymore. And you can look even about the centralized services, right? Coinbase, when they do the lend program, now they can't because the SEC is all over them. You use FTX for I use the FTX app sometimes. For anything pops out, get 8% on your assets you hold on the app. So I think now we've come to a place where users expect that. And I think that if the SEC will continue the way they're going and centralized services will not be able to provide that, I think we'll push more people who haven't been participating in DeFi so much into DeFi. And then at that point, I think a lot of difference will be in UI, I think the biggest problem of our user experience, generally I think the biggest problem of our industry has always been user experience. We need to be quite tech savvy in order to play around with the things we play with. But I think that, where we will have the easiest, less friction for users, easiest interface, best UIs in terms of the projects running, I think that's where we'll see a lot of people participants, because API is obviously very important for everyone, but some people can't really get to like the niche places with the super high API or going to like the super complex strategies just because they can't. They would opt in for something that's a bit simpler that they can understand, but it has like the general good experience for them. So that's also one thing I think will affect who's gonna win this. And to be honest, I think everybody's gonna win this. So I don't think it's gonna be like one winner. It's gonna be multiple. Yeah.
One of the things okay, go ahead.
Oh, go ahead.
One of the things that I heard from you, and which I find is so true, is why does it seem that most crypto sites UI UXs are so absolutely freaking disgustingly terrible? And I mean, we just upgraded, so I can throw this out, Coge 2.0. Now we have the new UI, but why are all these interfaces so ugly and so counterintuitive? Keela, why don't you?
Yeah, I mean, you see a lot of copy sites. First of all, and I mean that's fine. It helps projects get out there quicker. It means that a lot of the developers that aren't designers, they can take their idea, put it out there into the community quicker. I think that's one thing. If it worked somewhere, it probably will work on, like, say, Polygon or Avalanche or something along those lines, which I mean is fine to start off with. But then I think like you guys are a good example of getting something out there, seeing what works in the community, what the community actually wants, and then tailoring it to yourself. That I think is great. Yeah, I mean, Ren, design and making something user friendly is of utmost important if we really want to get get this to to the masses. That, and then just education. Yeah, it's probably one factor of a lot of designers are really just not necessarily into the space, but I think the NFT craze is starting to help get more designers to look at the blockchain space and hopefully be a little bit more comfortable, just hopping onto different projects and helping them and getting maybe paid in crypto versus getting paid in US dollars. Because I mean, there's designers that we've reached out to in the past. They only want to take USD. For us, we want to try and keep everything, crypto native. So it can be a little difficult that way.
Gotcha. Tyler, we're looking at maybe we're going to look at expanding Koje to some of the other newer chains as well in the very near future. Is QuickSwap thinking of doing something like that as well, or?
So for us, we've thought about it, but I don't think it's the best decision for us, because if you go to new chains, you have to split your incentive rewards. So like right now we mint, I think it's like 500 quick per day for liquidity mining incentives. If we move to a new chain, no one's going to use our DEX unless we give incentive tokens, of course. Because why would you provide LP on QuickSwap if you can make money with this other DEX that already has established TVL? So we'd have to bring, say, half of our supply over to that chain, which would then cut our APYs in half for Polygon chain. If our APYs are cut in half, why stay in QuickSwap when you can go to one of the other AMMs with higher yields? Because like we've all said before, people just chase yield. So if Sushi's paying higher, go to Sushi. So I think in order to stay competitive, we need to be in one chain. And that's also what we see with Uniswap, PancakeSwap, the Saber on, and then there's Pangolin and Avalanche. They're all single chain. Sushi's the only one. Sushi's the only one successful on multi-chain, and that's just because they were so massive on ETH. Like they have so much money that they can provide these rewards to all these different chains. Plus, the chains also give Sushi money for coming over because Sushi has a large audience. So if they can announce, hey, we're launching on Phantom will give them some money to do liquidity mining too, along with the Sushi. So yeah, it's hard to do multi-chain if you aren't already established large project.
All right. To finish up, I have one last question for all of you, and that is, so Koje has committed to the newer and intermediary yield farmer, especially we're obviously also catering to the advanced yield farming crowd, but we're looking at putting a lot of educational material out there to explain to new degens what is impermanent loss. And yes, you can go chase high APRs, but if the coin is not worth anything after 12 hours, all these APRs are not going to save you. What are you guys doing in the education space? And more importantly, how can we bring people into DeFi and make it available to literally everybody? Because right now it seems, I don't want to say elitist, but in order to go jump on all these different chains or use these dexes, you have to have a high level of intelligence, and like we talked about, all these UI and UXs are terrible at times, and you have to be technical savvy to participate. What can we do to make things easier for people and bring more people in and make I don't want to say more equitable, but make it better for everybody? Rand, I'm going to start with you this time.
So already mentioned UI UX before, but to be honest, I just think start simple, right? Again, creating educational materials and tutorials, etc., is something we do a lot. I mean, we don't launch anything without having a tutorial. Even when you guys launched KogeFarm for Orbs, we did a tutorial for our community showing them how to use it, what to do, etc. So that's obviously very important. And I think really is to start off simple. I mean, in terms of our community, we have Orbs is a proof of stake system, so we have the staking, which is pretty simple. We have our own wallet for staking. So for people coming in looking to see what they can do with their Orbs, we usually just recommend go for the staking. For people who are more tech-savvy, more complex, we can offer like different strategies. You go look at Orbs on Pancake, go look at Orbs on QuickSwap, go look at Orbs via Koje or Dino, whatever. So I think it's really starting simple and having like a way to kind of ease your way into it one by one and understanding one by one, just not dive in.
Okay. Kilo?
Yeah, UX UI definitely a big one. I think having solid communities. I mean, for us with the QiDAO community, they've been absolutely fantastic when it comes to giving us suggestions on what we need to improve, but also just helping other people out. So if you have a really solid community and somebody's having an issue or has a question, our team doesn't necessarily need to be on Discord 24/7 to be able to answer that. We've got community members, not even just mods, that are there to help people. So I think building a very solid and helpful community will definitely do the trick. It's another one is trying to maybe see how we can deal with some of the bad actors. I think a lot of people, when they get burned one time with a rug, maybe they're out forever, or if they're going to be out for a long time. That doesn't help us out at all. So I mean, there was the I think it was last week or a week or something ago, AFK on Polygon, they rug. We had a lot of people in the community that had put money into them. And then if you're looking through our community chat, like, hey, we're out of Polygon for good. We're out of DeFi for good. That's terrible to see. But if we can, as a community, come up or try and figure out different ways to help mitigate that, I think that's going to help give people a little bit more confidence to put their money into DeFi.
Right. That's one thing that Koje has been extremely strong at in the Telegram community. We've been super active interacting with our users and trying to help out and educate, and we're creating all this learning material or educational material. Tyler, you mentioned earlier that you're creating a bunch of guides and new material. What are your thoughts?
Yeah, so 2 months ago I would have said everyone on Polygon is what I would consider like a intermediate or advanced user, because in order to get on Polygon you'd have to use the ETH bridge. But now, I think about a month and a half, we got all these centralized exchanges allowing Polygon withdrawals. So it's a lot easier for people to get on Polygon. So now, you can get on Polygon for cheap. So now you have like less experienced users coming on. So now I'd say it's time to have more tutorials. We actually released one yesterday. We created a YouTube channel, and we created a video on how to use our syrup farms. And we're working on more tutorials just for like everything with QuickSwap. And then another thing too is the whole UI UX thing. I think it's confusing because obviously the people that make these are more, they're technical people. They don't want to deal with front end stuff, but they want to deal with the money. So you can hire these front end people, but you still need the people that build the products to figure out what these buttons do, and how to display the information, because that's a challenge for some front end people. And the back end people typically don't want to spend their time doing that, so that's kind of a challenge for the UI UX. But now we realize it's a lot more important to have a good UX, because not every user is as advanced as us and as like people we expect. So yeah, yeah, we're gonna do new UI and then of course tutorials around that.
Yeah, and Dito, I think one thing I will mention is that what we noticed in our community is that for a lot of the different guides, we didn't even have to create those. Community just got together, they created different guides, different strategies, threw those up. Then we had other people come in and translate them into different languages. So if you do build that strong community, like you'll just start seeing beautiful things kind of blossom, and a lot of the community helping you out in different areas that you didn't even ask for.
Absolutely.
Definitely.
I had a gentleman contact me today out of Korea. His name is Ryan, and he's like, hey, I want to translate all the Koje material into Korean for you guys just to help the project. And I mean, that's just like, ooh, I mean, mind blown, right? All these people chipping in, trying to help, and Koje is a community project, you know. We have the lowest fees in the industry, and so we don't have the marketing budget of some of the bigger players.
Peter, that's definitely a community you guys should tap into. We have a very strong presence specifically in Korea. It's very interesting, one, because I think, more than 50% of global volume of altcoin comes from Korea. But they're actually more than 50%. It's crazy, albeit with coin ones is crazy. But actually they don't have a lot of DeFi. I mean, a lot of them are, trading on centralized exchanges. They earn on centralized exchanges, but there's not tons of DeFi in Korea. So a good market to invest into.
So when I talked to Ryan today, he was mentioning how difficult it is for people in Korea to actually get money onto the blockchain. You can buy
they have a few
Bitcoin and ETH, but yeah.
Yeah, they have 4 big exchanges now. They have new regulations that just came in, so super regulated with banking partners, etc. But actually, quite an active ecosystem there around the cryptocurrency in Korea. Very interesting.
Awesome. If any of you guys would love to partner on some things with us, I would welcome it. I would love to work with you guys on educational material or whatever needs to be done. Tyler, some last parting words?
They got QuickSwap. No, just kidding. Thanks for setting this up. This is really cool. I hope to do more stuff like this in the future.
Yeah, we're definitely planning on doing more of this. So, Ran, how about you?
Again, thank you for having me. We're not, as I mentioned, we're not Polygon native, but just entering into the Polygon space now, and I really hope that we'll be able to, strengthen our partnership within this ecosystem and have stronger roots within Polygon and work with more and more projects here, because I am a strong believer in this ecosystem, and I hope we could bring value into it.
Same here, Keela.
Yeah, thank you. Thanks for including me into this. It's really great. I guess for our project, we if you've got assets on Polygon, come and take a look at QiDAO. If we accept your assets as collateral, throw them into a vault, borrow against them. We have a rewards program going on right now just for borrowing, so you're basically getting paid to borrow against your tokens, and you can do what you wish with them. And so go check that out. Yes, exactly. You can go and farm on those with your stable coins. So that'd be fantastic. But yeah, no, it's really a pleasure to be here. I've got I love yield farming and all that kind of stuff. So when you asked me to be on here, that was really great. So thank you.
Awesome. Well, thank you all for attending the first Koje Roundtable, and let's do it again sometime.
Cheers.
And
thank you very much.
Thanks.
Bye, guys.
See you guys.